Hey guys, it's Steve with Futures and Charts, and it's a Monday, February 2nd. So it's been kind of a wild weekend with commodity prices starting on Friday. And if you pay any attention to that, you'll know that silver took about a drop from 120, I don't know, it was way up there, all the way down to like 85. And and it when I checked earlier, it had a little bit of a rebound today. Gold was, I think, still down, but a lot of the commodities, crude oil included, actually had a reversal down today. So crude oil is following what the other commodities, metals did today instead of Friday. So it's and we're down big. I mean, we're down over 14 cents in diesel. So that's quite the drop for one day. So, but it's just like the silver market hasn't had a drop like that since the 80s, early 80s or something like that. So is what they're saying. But yeah, commodities are pretty volatile. So we'll just, this actually works in our favor. If you're looking to buy, we're taking some of that gain back that we had in the pricing, and is going to give us an opportunity to hopefully buy some uh, diesel for the summer here. We'll look at the chart and see where it could go. I've got some stuff drawn up on the chart there that we can have a look at and just see what happens, where certain things usually try to go when there's a reversal. So you can kind of watch for that, and then just see where the lower tier of the trend could be if it just happens to keep going down. So like if nothing happens in Iran, I think that's going to take a lot of pressure off the market, and it could be that that's something that maybe the traders have determined over the weekend, that this may not escalate. I think a lot of guys thought that we might actually hit them. I mean, there was some stuff happening over there, but I'm not sure exactly what it was, because there were some explosions and different things, but not sure what it was. So, but it wasn't us bombing them. So I think that's what kind of took some pressure off the market too. So let's go have a look at the chart.
Okay, guys, as you can see here, we're down about, on the March crude oil, we're down 292 at the moment, and diesel is down about 14.5 cents for the March contract. So let's have a look at the diesel here. So I've drawn in those trend lines that we've been watching for quite a while now, and as you can see, this thing went just about, it actually wicked through it, but it closed just a hair below the line here, the upper trend line, and has fallen back. Oh gosh, it's probably from 257 down to right now we're at 238.63. So that's a 19-cent drop or so from the high. So, but we're down to about the 618 level almost. We just about got there. And if we have a 50% retracement, we're headed back to about 2.28, which would give us another 10 cents down. So, but there's still this trend line down here that, if things really get squared away, this thing could actually come all the way down there. But, like through here, it traded sideways for quite a while in just kind of a short range. And once it gets back down into this 50% retracement level, it may do that again, which, that's kind of where the market will want to settle out after, because it's kind of got to figure out what the risks are compared to, as far as war and all those other things, compared to like supply issues. And if there's plenty of supply, which there seems to be at the moment, and with Venezuela, hopefully coming online with more product in the future, this could go lower. So it's just that geopolitical stuff, that the possibility of war, Iran, the Gulf states just having problems. So we'll just have to see how that finishes out. But crude oil, it actually ran into this second resistance line I had drawn in last week. wicked through it just a little bit, but it closed below it, and now we have fallen down, you know, quite a bit here as well. So same as the diesel. I thought I would just take a quick look at what spring wheat is doing, and just an example here of what to look for in the charts here, guys, is this kind of was a head and shoulders pattern here way back in, when was that? I think it was in June. Let's see here. Yep, June 20th or so. And once that happened and we broke through this neckline here, it's been plummeting ever since. And now we've been trading sideways, still trending down a little bit because we haven't created a new high here, but we also haven't created a new low either. So, because here's the low back here, probably, what is that, 10 days ago? If we stay away from that and we can start to keep trending upwards, this could get pretty good, because there's really nothing to stop it, you know, no really pattern here to stop it from going higher. So other than the fundamentals, which, you know, if there's plenty of wheat on the market, it might keep a cap on things, but sure would like to see it get up here to the $6 level again, which it did back here. So, and that was after a pretty big move down here, and then it sort of traded sideways a little bit, but that's kind of what I'm looking at. Hopefully we'll get back up to that $6 level, and because we're at 574.25 here in this Minneapolis spring wheat for March. So that's what this chart is. Alrighty, well, I guess we'll I keep bumping that thing. Take one more look here and see what's going on. We're still down over 14 cents, so yeah, I could see this continuing to go down, much like it did here. You know, it's sort of might mimic this kind of trade right here and head back down to this 50% retracement level for sure. So, all right, guys, that's what I got for you this Monday. So we'll talk to you later, and like on Wednesday, and you guys have a good one. Thanks for watching Futures and Charts.